there. Welcome to the College Investor Audio Show. Thanks so much for stopping by today. Now, today we're talking about Earned Income Tax Credit, what it is, and then how do you qualify? Let's get right to it. So the Earned Income Tax Credit, EITC, is for those with low to moderate incomes. For those who qualify, it's meant to just help them get back on their feet, or at least maybe provide a little bit of financial stability. It's nice. Now, the IRS does not provide funds for the EITC. Of course, they come from taxpayers. Now, the EITC is not applied to your tax return automatically. Instead, you gotta claim it on your tax return. You have up to 3 years, actually, to claim the EITC. Not that you'd want to wait 3 years to get it, but if you're just learning about it and think you may have qualified in previous years, there still may be some time to claim the EITC for a previous year. So today we'll go over what the EITC actually is and then how to qualify for it. This information, by the way, applies to the 2020 tax year. Just want to make that clear. So how much can you receive from this? The EITC ranges from $538 to $6,660. Nice. The figure varies with income, of course, filing status, and then if you have qualifying children or not. There's a nice table, a little graph that you can see what the cutoffs are and then how many kids you have and then the max EITC you can get. It's all laid out for you really simple at thecollegeinvestor.com. But let's take a look at an example, though. If your income is maybe $40,000, you filed single and have one kid, your maximum EITC is $3,584. That's pretty good. Keep in mind that the income levels listed in that table that you can see at thecollegeinvestor.com are pretty much just slightly above the 2020 poverty levels listed by the Department of Health. For one person, the poverty level is an income of $12,760. That's just below the $15,820 maximum income listed for a single filer with no kids. Just wanted to throw that out there. Refundable. The EITC is a refundable tax credit. That means you can receive a refund. The way the EITC works is that it reduces taxable income by a dollar amount. For those with incomes that are less than the EITC dollar amount, they get a refund. It's federal only. This is for federal income tax credit only. It does not apply to state, city, or county taxes. Now, in some cases, it may also not cover Social Security taxes. It's only meant to reduce federal taxes. Let's take a look at eligibility. Now, the EITC is available for both employed and self-employed people. Here's a quick list of some of the criteria in order to qualify and be eligible for the EITC. You must have earned some income. This is income from some form of employment, including self-employment, by the way. Dividend or investment income, pension, and unemployment are not eligible forms of income. Valid Social Security number issued before the date of your return. Social Security numbers must also be available for any participating spouse or kid. Investment income of $3,650 or less. Filing status of married filing jointly, head of household, qualifying widow or widower, or single. And it is not necessary to have children for the EITC. But there are some criteria for those with and without kids, and let's take a look at those right now. So for claiming the EITC without qualifying children, and this also applies to any spouse that you are filing a joint return with. This is straight from the IRS website. You meet all of the EITC basic rules, and you have your main home in the United States for more than half of the tax year, and you cannot be claimed as a dependent or qualifying child on anyone else's return, and you are at least 25 or under 65 at the end of the tax year, usually December 31st. If you are claiming the EITC with a child, either as single or with your spouse filing a joint return, the child must meet all of the qualifying rules. Since qualifying a child is more involved, it's best to use the IRS's EITC assistant. And there's a link to that at, you guessed it, thecollegeinvestor.com. Now let's take a look at who is ineligible for this. In addition to the income levels that we have already kind of talked about today, other criteria might make someone ineligible for the EITC. If you're filing married separately, or you can't be a dependent, and you're also filed Form 2555, Foreign Earned Income, or Form 2555EZ, Foreign Earned Income Exclusion. All right, so the EITC is a great financial boost for those with low to moderate incomes. There are a number of qualifying criteria, but most people who meet the income thresholds should qualify for this. Keep in mind that you can go back up to 3 years to claim the EITC, which is really nice. The EITC must be claimed on your tax return since it is not automatically claimed for you. Just some quick tips. I hope that helps. And if you know somebody in this situation and you're like, hey, they should know about this, feel free to share this with somebody and just help them out too. That's what we're here for. Also, check out the graph at thecollegeinvestor.com to dig in a little bit deeper, and you can take a look at so many different resources and articles there as well. Again, it's thecollegeinvestor.com. Thanks again. We'll talk to you again soon.